Hello traders, Gary Wagner here. Approximately 1:50 in Honolulu, 7:50 in New York on Thursday, 14th day of October 2021, and this is the Daily Report for Gold and Silver. I think you'll find today's show interesting. It's almost a part two to the weekend review we did 2 weeks ago when we talked about the dramatic possibility of downside. On this report, we're taking that other angle in that now that we have approached 1800, what are the various resistance levels that gold could encounter if it continues in rally mode? We're going to use the same tools, meaning a long-term historical perspective. I think you'll find the show full of insight. Gold futures today had a fractional gain of about $2.60. It is currently fixed at $1,797.30, but what is most impressive is it challenged $1,800 per ounce. The high today, $1,801.90. On today's show, we're going to take a long-term view of the market to put current pricing in perspective and also define various resistance levels gold could encounter if it continues to track higher. Dollar weakness did provide a large percentage of the gain seen in gold, with the dollar trading lower by 10 points or 0.11%, currently fixed at 93.98. When you compare the drawdown of 0.11% to the rise in gold, which is plus 0.14%, you can see there was really fractional buying and dollar weakness contributing to today's price change. Today's analysis will be a little different than what our shows usually contain in that we're going to look at both the micro and macro view. The reason being is that what we witnessed today was gold trading effectively to $1,800 per ounce, but then backing off of that particular price point. And that's a key and critical number for a number of reasons on a technical basis. First off, we've drawn just a straight horizontal line, which we will bring into perspective on some subsequent charts. This particular number at 1800 is defined as the high of the day. In fact, if we look back over the last couple of weeks, we have to go really back to August, which is the first time gold traded above 1800. The following week, it actually broke not only to a higher point, but traded to a high of approximately 1836. And then this particular arrow here speaks about the time when we saw gold break back below $1,800. We have traded below there. We continue to do that today, but I want to show you through various long-term charts why that is such a key and critical price point. One of the reasons $1,800 per ounce is such a key level in terms of pricing in gold is former history. And to illustrate that, we really have to go back to the triple top that was created from, call it 2012 through 2013, when on three distinct occasions, we saw the market trade to 1800 and then back off. If we draw the line forward, as I have with this horizontal line, you will see that this current pricing precisely matches the highs achieved back in 2012 through 2013. As we spoke about on the last chart, the triple top that we saw between 2012 and 2013 provide us with really detailed historical data that suggests that this could be a potential resistance area. But if we see gold close above that price point, as I say in our opening letter, resistance would then become support. And then we would need to track the next logical place that gold could travel to. And 1843 is really the important number there. That is based upon a Fibonacci retracement, which starts at the lows of the end of 2015 at 1040 up to the all-time record high. So this would be a key and critical number without any question. Above that comes 1900. And then, of course, the record top that occurred at approximately 1920, that would be the next target if gold continues to rise higher. During the show, our entire analysis is based upon the question, what if gold closes above 1800, and where in fact would it find different areas of resistance? On this last chart, we're going to look at key levels of support, and we're going to do a comparison, and the comparison is also going to utilize the same Fibonacci retracement set. I draw your attention to these lows that came in back in 2011 through 2013. They came in roughly at 1568, because at that point you can see we had a number of bottoms just as we had a number of tops, but at the point in which it broke through that, it broke through severely into a multi-year decline, which took us to this low. For the same reason, I am looking at the key support level of 1680 to 1690. That is the 38.2% fib retracement, and that is also where we've identified this triple bottom that's occurred most recently. In other words, I am seeing some analogous movements in the market. We had a defined period in which we had a series of lower highs, but we had what's called a flat bottom, in other words, equal lows. In the same way, we are now seeing lower highs, but we are also getting a flat bottom. In both cases, it signified key and a critical level of support. We spoke about where it could go if it rises. However, if it fails to break through resistance, although there are points in between, the key level, the absolute key level has got to be this point here, 1680, because like we saw in 2013 when it broke below that triple bottom, a break below this triple bottom could take gold substantially lower. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekend review. Bye-bye.